Hey everyone, Rob B here with Rob D, and you are listening to the Property Podcast Market Update. This week we bring you the top cities for capital growth, news on stamp duty, capital gains tax, and Help to Buy, and also give you an insider's insight to what's happening in the property market right now.
Welcome to the Property Podcast, where every Thursday property investors come to be informed and inspired. Yes, it's our market update, and yes, it's been another busy month. But no, just because it's December doesn't mean we're easing off the pace on the podcast at all.
Yeah, we've got loads of exciting stuff coming up, Rob, haven't we?
Yeah, next week is probably the one I'm looking forward to the most, which is our Resources of the Year. Always a very popular episode, and loads of good stuff we've discovered this year. And then after that, things maybe get a little bit less good, or maybe not. We're looking at our predictions.
Yeah, that's always a bit of a scary episode because we're looking at how we've actually performed for the year. So feel free to laugh along to that one. And then loads of other good stuff to look forward to as well, including our top episodes, reflection of the year. And once we kick off the new year, we're starting with our predictions for 2021. So loads to keep you busy with over the festive period.
Let's get into our market update then and have a look at what was happening throughout the month of November. Well, today is the 3rd of December, which means we're now into tiers rather than lockdown. So maybe you can go and have a pint if you have a substantial meal along with it. Maybe you can't. I don't know. I've kind of lost track of the whole thing. But in any case, lots of COVID-related stuff in the news, as you would expect. But I'm sure you haven't missed much of that. What you may have missed are some of the goings-on in the property market this month, of which there have been plenty. But a good place to start, Rob, because keeping an eye on prices is always good fun. And we had a very interesting home track report out in November.
Very interesting, because while the world could appear to be a negative place, and that includes the property world, it seems that a lot of people are ignoring that, and house prices are really, really strong right now. In fact, growth is up 3.5%, the highest for almost 3 years. Topping the table is Nottingham, Rob, which is pleasing because we've said our prediction show is coming up, and I know Nottingham is definitely in that list. And Nottingham has performed exceptionally well. It's up 5.3% year on year, which, considering the year that we've just had, is remarkable.
Yes, this year has made anyone making predictions look a bit silly, really, hasn't it? It is amazing. And we were more bullish than most, but we didn't go so far as to go out and say, well, this year's going to be better than it has been for years, because who would have thought that was going to be the case? The Home Track report does note that they see this growth slowing down. I'm getting the sense from my observations that we're getting into the Christmas slowdown now. The market always tails off as we get into December. You've also got the fact that it's probably too late now to get in ahead of the stamp duty changes. So that's causing activity to slow down. How far will it pick up again in 2021? We don't know. But in a few weeks, we're going to have a go at predicting it.
And as you mentioned, Rob, stamp duty has played a big part in helping property prices move upwards. Not the only factor, but certainly has helped. And a story from the Mortgage Introducer, and I'm not surprised to read this story, tells us about calls from members of the property industry who want a stamp duty extension. Now, I previously said on a podcast a few months back that I wouldn't be surprised if stamp duty or Help to Buy gets extended. Now, although the stamp duty holiday is still technically open, for anybody looking to purchase today as they listen to this, or in the next couple of weeks, really, you've missed that opening, you've missed that holiday. So the extension for anybody wanting to take advantage of it is needed now. And a few months back, Rob, I said on the podcast that I wouldn't be surprised if either stamp duty or Help to Buy, which was also due to end next year, gets extended. And it seems there's a bit of good news around that, at least where Help to Buy is concerned.
Yes, the Help to Buy scheme has been officially extended yet again. You said how there were people in the property industry calling for the stamp duty holiday to be extended. And of course, estate agents would call for that because it helps them out. Similarly, house builders are very keen on Help to Buy continuing. And because of their size and because of the importance of house building to the economy, that opinion tends to be heard in government. And this extension is brilliant news for house builders because, according to someone on our team who's got a bit of inside info on these things, Help to Buy sales have been making up over half of the sales that the major house builders have been making. So it's a really big deal for them, the fact that this has been extended. There are some changes to it though. It's becoming a little bit less generous with time. So you now need to be a first-time buyer. It only applies to purchases of a newly built home. And there are regional price caps. So in London, you can buy a property up to 600,000. In the Northwest, it's 224,000. So you can't be going out and splashing the cash on something way above the regional average price. But the core feature of it remains, which is that effectively you can buy with a 5% deposit because the government will kick in an equity loan of up to another 20%. So when we're talking about what property prices might do next year, the continuing existence of Help to Buy is going to be a big factor in giving prices some support.
And Rob, earlier in the month, it feels like a lot longer ago now, we talked about capital gains tax and the potential implications for property investors, and we've got a bit more news around that now.
Well, yes, like we said at the time, this is a real case of misleading headline syndrome. The BBC headline was capital gains tax, rate should double, said government review. And then, as we said when we talked about it, they didn't actually say it should double at all. They suggested that it might be aligned with income tax bands. So property capital gains are currently taxed higher than others. It's taxed at 28%. So it could go up to 40 or 45% depending on your tax band, or it might not. However, something that we mentioned in passing and that's been picked up a little bit more since is that the report also suggested that if they did do this, then indexation allowance should be brought back, which basically means that any capital gain that's just due to inflation is kind of cancelled out. And so you only pay capital gains tax on the capital gain over and above the rate of general inflation in the economy. If that did turn out to be the case, then it might actually turn out to be better for property investors because, yes, property in many parts of the country has grown consistently faster than the general rate of inflation, but a lot of the gain does come from general inflation. That's one of the wonderful things about property investment. So if that got taken out, that would be very good news. Nevertheless, as a result of this review, in some form or other, it seems like capital gains tax is going to change, and it's only going to change in general to make it more expensive. So according to a piece in the Financial Times the other day, there are a lot more people looking to sell assets of all kinds before these changes come in, which is good news for the government because they'll get a little tax boost from all those sales happening. And again, when we're looking at property prices next year, we said that the continuation of Help to Buy could be a factor to the upside and capital gains tax could be a factor to the downside because you might get more landlords who've been holding property for a very long time and sitting on some big gains starting to sell up. We'll have to wait and see.
So that obviously is a big news story for the property industry. Another big news story, but possibly contender for the least sexiest headline, is government steps in to help homeowners caught up in EWS1 process. The EWS1 process. Now, that may not mean anything to you, and if it doesn't, it may be because you don't own an apartment. But at the moment, a lot of apartment owners in the UK are affected by this, and unintentionally so. The EWS1 form came after the Grenfell tragedy, and it looked at cladding on apartment blocks across the UK. Now, what was included in that has changed over time, but more recently, the changes have been far too aggressive. Don't know how this ever happened, but it managed to include apartments that didn't even have cladding at all, so that people were unable to mortgage, remortgage or sell their properties because of the EWS1 situation. So it boggles the mind to how it ever included apartments that didn't have cladding. But fortunately, common sense has eventually prevailed, and now the government has worked alongside the Chartered Surveyors and the Finance and Building Society Association to come to an agreement. I don't know why they all needed to formally agree this. It seems common sense to not include apartments that do not have cladding. Now, that actually now means that frees up around, according to this report, 450,000 homes, which is a big number. A little bit more work needs to be done around this, though, because lenders are still insisting on developers having an EWS1 form, even though building regs dictates to them that they have to build to the right compliance level anyway. So they're having to produce a form for work that's already been done, which in some cases is delaying developments being complete. So it's a step in the right direction, and I'm sure this will all be resolved in a not too distant future as the surveys are worked through the system and hopefully a bit more common sense prevails, but a bit more work to do.
Yeah, and I've got a bit of inside info on this one.
Ooh, love a bit of inside info.
Yeah, I got an email from a real-life surveyor who will remain nameless because he didn't say I could name him, but...
Yeah, don't worry, Derek.
Well, whatever his name is, he's got a lot of letters after it, so he's certainly very highly qualified. But what he's pointed out is that people are saying that a reason for the delay is that there aren't many qualified surveyors who can actually produce these reports, which is true. But he said that another major barrier is that the form that they're required to fill in by the government asks them them for unlimited liability. And that is something that surveyors are basically never expected to do in any other situation. So maybe it's just something that hasn't been properly worded or thought through. But that means that most of them don't have insurance policies that allow them to actually do this. And if you do take out insurance that covers unlimited liability, it costs a fortune, which is why it's so expensive to get one of these forms completed. So it got a brief mention in the news story that the government was looking at training more surveyors and looking at the insurance requirements. So hopefully that part will get sorted out, because if it does, then that means for all the blocks that do still fall within scope, that might be able to speed them along a little bit and bring down the cost of getting one of these certificates. He did also mention, as a kind of a public information message, that there are people out there supplying these forms basically fraudulently. They're not qualified to be issuing them, but they're offering them a lot cheaper. And so because the proper version is so expensive and takes such a long time, some people are actually paying for these and shouldn't be. So I think the general message is be very sure that the person who is doing this actually is qualified to be doing it and is doing it properly. But hopefully, like you say, Rob, things are moving in the right direction now, and this will all get sorted out.
Indeed. And Rob, as you shared one insider story already, let's talk about another one we gave you a little while back, which was that the Hong Kong market has been secretly boosting the UK property market for some time. And Rob, you've managed to dig out a news story from the South China Morning Post. I must admit, that's not on my reading list.
Not on mine either. I've got another listener to thank for this one. Basically, this whole show is just people sending us stuff and us reading them out. But the story says that Hong Kong has bought 305 million of London homes in the first 9 months of 2020, which places them second in the league table of foreign property buyers, behind France and ahead of mainland China, which is surprising because obviously China is way, way bigger than Hong Kong.
It is, but at the time we gave you this insider scoop a little while back, we told you that it was probably led by the instability that was happening in Hong Kong at the time. And that exodus of cash was leading to safe assets in the UK. And it mentions London, but also other areas have benefited as well. Manchester, Birmingham and other major cities have definitely seen that influx of cash. But another little insider piece of info for you. The developers I speak with all the time have told me this surge has now stopped, or at least dramatically slowed down. Now, is that it stopped for good, or is it a temporary pause? Who knows? But it seems that the cash that wanted to get out has, or that the confidence levels in Hong Kong have just improved slightly. Who knows? But for the time being, that surge has had a pause. So we talked about stamp duty playing an impact on property prices rising this year, but also that Hong Kong cash has certainly helped as well, which is all interesting, but it just makes our jobs of predicting property prices for next year even harder.
Well, here's something that I never would have predicted. The government has done something sensible. They've extended the Green Homes Grant, which was due to be ending at the end of March next year. They've extended it by a further year. Why is that sensible? Because basically there just wasn't enough time for it to work. So the scheme allows you to get a grant for energy improvements to your property, but there's only about 6-8 months in total from the scheme being announced to ending. And in that time, you need to go out and get quotes and have the work completed by the deadline. And there just aren't enough tradespeople to do this work. So it's now been extended by a year, which seems eminently sensible.
So a busy month for property and a busy month ahead for the Property Podcast, as Rob mentioned at the beginning of the show. Make sure you tune in for those exciting episodes coming up. And we've got a very exciting Ask Rob and Rob on Tuesday, our final Ask Rob and Rob of the year. Yes, the Property Podcast will never take a pause, never take a break, but Ask Rob and Rob does take a little time off for Christmas, but we've got a very special guest in to sign us off for the year.
Yes, it's a special one, so listen out for that, and then we will see you back here same time next week for the Property Podcast. Until then, enjoy your week. Take care. Bye-bye.
Bye-bye.